What's up guys, and welcome to Drive to Thrive. Today I got an exciting episode lined up for you on Lightspeed, so let's get started. But before we do, make sure to watch all the way through because lots of great content coming your way. We'll be talking about those latest earnings, taking a look at some charts here, and discussing how you can use options to hedge your position on Lightspeed or any other stock out there. Also, I'm coming up onto my 250 subscribers, so at some point, I don't know when, but I'll be talking about that giveaway, so make sure to watch all the way through. Now let's get started. Alright, so like I mentioned, let's start off with the earnings here. So we are looking at the third quarter 2022 financial results, and you might be saying to yourself, Adrian, why is this third quarter 2022 when we're still only in February? And the reason for that is because some companies out there decide to make their fiscal year at some really odd time. So for example, like with Lightspeed, their fiscal 2022 year started in May of 2021 and will be ending here in April of 2022. So we are currently looking at the third quarter, which went from November, December, January, and the fourth quarter is from February, March, April. So that is the reason why this is third quarter of 2022. Now, overall, the earnings were pretty good. There was nothing out of the ordinary. The big news, I believe, was that their longtime CEO and founder, Dax Da Silva, was stepping down as a CEO and was taken on to a new role, which is an executive chair of board of directors, and JP Chevette will be the new CEO of the company. So they started off with that news, and let's kind of see what their operational highlights were for that third quarter. So their total revenue was 152.7 million, which was up by 165% year over year, due in part of a combination of a strong organic growth and 25.9 million in the revenue from the recent acquisitions of Vend, New Order, and Equid. So subscription and transaction-based revenue grew by 175% year over year to 144.4 million. Their organic growth, which is without the new acquisitions, was up by 74% year over year. So these guys will talk a lot about their organic growth as well, and it just means that it's the growth without the acquisitions of Vend, New Order, and Equid. So let's see, their subscription revenue increased by 123% year over year to 68.3 million, and again was assisted by the acquisitions of those three companies, where their customer location grew to 315,000 at the end of the quarter, which is an increase of 174%. Their organic location growth was from 115,000 up to 159,000, so still growing organically. That is good. Their transaction-based revenue was 75.8 million, which grew by 249%. So again, incredible numbers, but I'm pretty sure those were assisted by the acquisitions. Now for the fourth quarter, Lightspeed delivered GTV, which is a gross transactional value of 20.4 billion, up 124% year over year. Omnichannel retail GTV grew by 115%, and their hospitality GTV grew by 137%. Now their organic GTV growth was 53% year over year. Their organic omnichannel retail growth was 36%, and their organic hospitality GTV grew by 79%. Now, as of December 31st, 2021, 5.3 million of merchant cash advances were outstanding, up 13% from the previous quarter. So these are cash advancements that have not been paid by these merchants. So that is up by 13%. Hopefully that will decrease next quarter here. So adjusted EBITDA in the quarter was 7.1 million versus 6.6 million in the same quarter last year. But as a percentage of revenue, adjusted EBITDA came in at 4.7% versus 11.4% last year. So actually that decreased. Now their fiscal 2022 outlook, so they increased their projection in revenue to about 540 to 544 million from 520 to 535. So that is good to see. And their adjusted EBITDA loss of approximately 45 million is in line with their projection of between 40 and 45, which is approximately 8% of the revenue. Now fourth quarter 2022, so again, this is from February, March, April. They are looking to have revenue of 138 to 140 42 million, and their adjusted EBITDA loss of approximately 20 million, which is 14% of the revenue. So that's pretty big number though, in my opinion. Like, you want to see that number go down to 10, 8, 6, 4, and so on and so forth. So hopefully they start to decrease that EBITDA loss. Now, the company also mentions they believe that an organic subscription and transaction-based revenue growth of about 35 to 40% per annum is achievable. So that is a great number to see. Now, they talk about a bunch of other things in here, some of their other long-term financial outlook, but I won't be going through it in this video. If you want to take a look, I will have a link in the description below and you can read all that in there. Now, let's quickly jump over to these charts and see how Lightspeed's been doing since I released that last video. So like I mentioned in that previous video, that $30 support here is key. This is where you want to see buyers start to come in and run this price higher. If we can't hold this $30, unfortunately, I think we can go all the way down to $10, which is the pandemic low. Now, I know a lot of people out there don't want to admit it or they don't want to hear this, but the reality is grim. The stock market in general has been selling off here. There's lots of downward momentum and it's just the reality. So let's kind of talk about how we can hedge this position. Like, I'm there with you guys. I've been buying and actually deployed the last of my position that I was planning to deploy on Lightspeed here just last week. So I think I bought in around like $34 and now I'm just waiting for this thing to start running up. Now, going over to our daily chart here, so we can see that over the last little bit here, especially right after earnings, we're just kind of skimming along the bottom. Now, for the bullish scenario here, what I'd like to see is for us to hold this $30 support and then hopefully start to see that volume to climb up. So we had a nice spike here during earnings of about 4.4 million, but then after that we're sitting in the average here of about like 1.3 million volume, which is what it has been for a while now. So again, expecting this to bounce around the bottom and then start to see that volume come in, spike up, form a support here around that $40, then start to look for this target here, $55 in the near future here. I think this is going to be a strong resistance because you can see this was a strong support going back. And then eventually this 200-day moving average will probably start coming down, possibly even as low as this $55, $56 area. So you'll kind of have a combination of both the 200-day moving average come down plus this resistance, and I think we'll start selling off of here. Now, if we don't hold this support and we start to see some weakness in the upcoming weeks here, you know, kind of look for that classic breakdown, come back up, a retest from the bottom side, and then once we start selling off, then this is your cue that either you need to get out if you're a short-term trader, or if you are a long-term trader, then think about how you can hedge your portfolio, how you can hedge your position in Lightspeed. Now, that's something we'll discuss in this video, so make sure to stay tuned here. Now, if we do sell off, then what are some of these targets here? Maybe we need to go to our weekly chart here, but another support here, you know, that I can see is around this $22. Now, we had some action around here, and if we can't hold $22, then like I mentioned, you know, we're going down into the tens here. So that is kind of what I see for our support and for our resistance. Now, going into our daily chart, let's zoom out and let's see what the MACD is doing. So currently our MACD seems like it's going to the upside here, still has that bullish momentum. Now, what I've seen with a lot of stocks here in the last week is once they kind of get to the zero line, they tend to start losing momentum and selling off. So keep an eye out on the MACD, and also our stochastic is in that overbought territory right now. So again, could be a very likely scenario that we do sell off from here. Now, on our weekly chart here, we are still in this bearish momentum, deep overextension here to the downside. Now, what I'm expecting is for this thing to start rotating to the upside and for that slower moving average to cross over, and this would be a bullish signal right here. And last time we had something like this happen, you know, was around June of 2021. This is where we had the crossover and you had a nice spike up. So keep an eye out for this crossover. If the crossover doesn't happen, then we could also see us get rejected, something like this, you know, where this comes up and it just gets rejected off of here, similar to what happened back in October of 2020 to the upside. Now we can expect the same thing to the downside. Now our stochastic is sitting in this oversold territory, starting to move up here, so that's something we want to see in the long term. On our monthly chart, I think we're still flat on the stochastic here, and we are are moving down on the MACD. So overall, there is more bearish momentum to this stock, but like I mentioned, it's the whole general market has just been selling off, lots of uncertainty out there. So we'll see what happens in the upcoming weeks and the months here leading up to this Fed hike. Now, like I mentioned at the beginning, I am coming up onto my 250 subscribers here, guys. So I want to do another giveaway. Now, what I'm thinking is $100 to my 250th subscriber. And the way I want to validate who that person is would be if you could please take a snapshot of before and after you subscribe, and then send me that screenshot to drive2thrive.info@gmail.com, which should be somewhere down there, and send me that screenshot where it says 249 subscribers, and then after you've subscribed, you'll be the 250th subscriber, and I'll send you $100 via PayPal because that just seems to work the best. Also, if you're enjoying this video so far, please do me a favor and smash that like button. It does help out a lot to get it out to the other viewers and help me to build up that subscriber base. So thank you so much for doing that. And now let's talk about hedging our Lightspeed position here. So going over to our options here, I did a little bit of digging around before I started this video, and I was looking at this May 20th, 2022 expiration, which is about 97 days out, and then comparing it to this August 19th, 2022, which is about 188 days out. Now, depending on the size of the position you currently have, like if you only have $1,000 in Lightspeed, maybe it doesn't make sense for you to spend up $280 in puts right now. But if you have like a larger position, you know, like $5,000, $10,000, then definitely something I would think about. Now, as the case is with insurance, you know, 99% of the time that insurance is useless. You don't need it. Like think about your house or car insurance, you know, you're paying for it, but it's not like every day your house is burning down or you're getting into a car accident, right? And it's the same idea with this. You purchase this insurance, but chances are it might just expire worthless. But in case Lightspeed does sell off and go down to the 10s, then you'll be making some nice buck on the way down and kind of raising some money. So that way, once we do get down to the 10s, you can take that money and reinvest it into Lightspeed or whatever you want to do with it. Hashtag not any kind of financial advice, right? So what I've been looking at is this $25 strike, which is currently about $280, and this is for the May expiration. Now, the break even on this strike is $25 minus 280, which works out to 22.20. So Lightspeed needs to go down to 22.20 by May 20th, and you just break even. Now, if it goes down to, let's say for this example, it lets me go down to $20. You see that on April 1st, you're looking to gain about $303. And now on May 20th, which is the expiration, that option would be worth $223. Now this is on one contract. Now, once you buy 2, 3, 4, you know, you're looking to increase that position to $1,200 and $880. So again, depending on how much money you're willing to hedge on this trade. Now, if we go down to August, you'll see that we'll still be using that $25 strike, but right now this one is going to cost you about $470. So 25 minus 470, you're looking at about $20.30. So now your break even is about $2 more than what it was on the May expiration, and also it's costing you about $470. Now, once we do get down to $20, you can see with this example here, you're only making about $191 on May 17th and only about $33 on expiration. So in my opinion, that May 20th option just makes more sense. It does cost a little bit less, and if stocks do fall, they tend to fall really quickly. So 3 months should be more than enough on this option. Now, that is it for today, guys. If you did enjoy it, please smash that like button. If you didn't enjoy it, give it a thumbs down, but let me know what I can do better in the future. Now, thank you so much. Enjoy your day. Don't forget to subscribe, and we'll see you next time. Bye bye.